So here's my 7-month update video on Fundrise, investing with real estate investment trust. So far, all time, I'm up $52.50. I'm up 33 dollars in dividends, $19.76 in appreciation, and the advisory fees are around 49 cents all time. So guys, this is the reason I'm recording this video is because not only did I want to show an update, but I wanted to give you guys an alternative to investing in the stock market right now. So as you guys are probably familiar, we just experienced the largest stock market crash since 1987 on March 12th, and a lot of people have seen their stock portfolios, myself included, whittle down a lot of the gains. So that 11-year bull market that we were enjoying since the financial collapse, that's over, guys. So right now we're in bear market territory with the Dow Jones already down to 21,000 points. We really have no idea where this thing could go, and we could go a lot lower because it just seems like with all of the leagues closing, the NBA's been postponed, the PGA Tour, the MLB spring training postponed. It just seems like right now people don't want to go out, and they don't want to go out amongst crowds unless they really have to. So this could slow down economic growth for quite some bit. So I wanted to give you guys some alternatives to invest in the stock market right now. Basically, what Fundrise is the ability to invest in real estate investment trusts for the majority of the money and residential things. So I just wanted to kind of show you guys how Fundrise, how they are dealing with this whole coronavirus outbreak. So I wanted to read you guys some information from their site. So wait a minute. Okay, it's loading. Okay, here we go. So I'm just basically showing you guys the letter that they've written on how they're personally dealing with the coronavirus outbreak. So it basically talks about the ongoing coronavirus is a global outbreak. Its definition of black swan event doesn't possible to predict, yet it has caused massive disruption. So they also wrote something back in 2017 about what you should do during the next investment crisis. So they said the funny thing about black swans is that by definition they can't be predicted. So rather than building an investment strategy around forecasting markets ups and downs, hoping that a life raft will magically appear when things get choppy, we've instead set out to build an ark incapable of weathering unexpected storms, assuming one will eventually hit. We do this by consistently seeking to make sound investments with strong fundamentals, even if it means being slightly more conservative in our approach than others. So in other words, we've been specifically building a broader Fundrise portfolio with the intention of being able to sustain a prolonged period of economic distress as a result of this kind of eventuality. So Fundrise, they invest about 70% of their portfolio in residential retail properties, which the majority of them are focused on providing well-located and reasonably priced housing to workforce renters. We've weighted towards these types of assets because they generally have a better withstood past economic downturns. Shelter, like food, is a basic need rather than a discretionary expense. So it also says that virtually all of our remainder of our real estate portfolio is either senior loans secured by the underlying property or commercial assets that we own outright with no debt in place. Again, this substantially de-risks the portfolio as excessive leverage is the primary reason that many real estate investors lost principal in previous downturns. So basically, guys, what they're saying is that their approach is much more conservative, focusing on residential properties with working class people paying the rents, but it's a lot more sustainable in the long run. So now let's just go back to my update page and show you guys exactly how this works. So like I said, guys, this is just a nice alternative to the stock market. You should never put all your eggs in one basket. So for some of you guys out there that are 100% in stocks, I would consider putting some money in something like Fundrise. There's lots of real estate crowdfunding platforms out there. You guys can check out a complete list. I think I reviewed the 8 best ones. This one is personally for non-accredited investors, but if you have over $25,000 or so to invest, you can actually be an accredited investor and take a look at that one. I think it's around 25,000 or more, something like that. But this Fundrise, you could start with just $500. So it's for the little guy out there. So if you guys don't have a lot of money, as you can see here, I didn't start with a lot of money. I started with $500 in August 2019. I added another 500, and so far I've been I've been just coasting along, but now due to the recent stock market crash, I do plan to add a bit more money to this account because I like the passive nature of it. So I'm just going to show you guys some of the things in my portfolio. So basically, this is how the positions are. So it's basically like having a stock portfolio, except you're investing in REITs, not individual stocks. And you can see my active projects I have here. I've got 108 active projects. All the money is kind of equally invested into them. So as you can see, most of the returns on here are modest. You know, around 8 to 12%, something like that. You know, Fundrise, they take the slow and steady approach with real estate and investment trust. You're not gonna get basically the high flying growth that you see with stocks, but it's steady and consistent. So guys, that's it for now. My phone battery's going, and I want to wrap this video up. But I just wanted to give you guys a quick investing update on Fundrise, how I'm doing, and that this is a nice alternative to the stock market. So I'm going to be posting more videos on Fundrise in the future because I think it's a really nice way to balance out your stock portfolio and if you're holding bonds or stuff like this. So my last note would be, guys, don't be too worried about the coronavirus. You know, it really depends on where you are in terms of your retirement plan. So if you're like me, if you're in your 20s, 30s, or 40s, I would probably be adding to my stock positions. If you're over 50, don't be afraid to go and hold cash. You know, if you're closer to your retirement timeline, if you're if you're over 50, you really don't need to make as much money as possible. If you've been doing the right things in your 20s, 30s, and 40s, you should be basically looking for income producing assets that will spit off income so you can enjoy your older years. So if you're into capital appreciation over 50, you might want to hedge some of your positions using put options. That way you won't be hurt so much by gains. And there are also a list of short index stocks that you can purchase to make money off of the downturns. I'm going to leave a few of those in the comments below and make a brand new video on that pretty soon. But so that's it for now. Like I said, for you millennials out there, you know, I saw the similar things happen in the 2008 stock market crash, and everything basically went much higher than it did before. So that's it for now, guys. I hope you enjoyed this video, and please check out Fundrise. And also, if you want to sign up, you can use the link in the description box to sign up under me. I don't receive a lot of money if you click my link and sign up. They just waive my advisory fees. So I'm just out there to help you guys provide as much value as possible. So if you found some value in this video, please give it a thumbs up and subscribe to my channel for more content. So that's it for now, guys. Take care.